All right. Thank everybody for showing up. Thank you for another opportunity to share with you what I believe is of great value and benefit to you, your family, and your community. My name is Max, and welcome to a presentation from River Rock Financial Group, LLC, about winning the money game, tax-free accumulation. This is 2.0 because this is a shorter version of a video I previously did. A presentation I previously did about tax-free accumulation, utilizing the power of insurance, life insurance in particular, and annuities, and all the things and products that it affords to individuals, businesses, busy professionals, and families. River Rock Financial Group is licensed in Georgia, North Carolina, and Texas, and all examples are for illustrative purposes only. These do not represent any particular investment or an offer of insurance coverage or benefits. Values shown are before tax. All withdrawals from a retirement plan are taxable as ordinary income. Please consult your tax expert or advisor. Once again, I want to thank everybody for showing up to take some time out of your busy day to listen to me give you what I believe is of high value. So without further ado, let's go ahead and get started. All right, so the mission of River Rock Financial Group is to educate families, individuals, and businesses about three things. One, creating and sustaining generational wealth, strategic future financial planning, and asset protection. For centuries, insurance has been used as a tool of those who understand the power of accumulation and passive wealth generation. So building wealth is a long journey. It is a time-tested and proven strategy. In today's world, we do have a lot of instant gratification going on. Unfortunately, that's not how you build wealth. But it can be done at a faster rate in the 21st century. This is how you build wealth and pass down generational wealth and utilize the mechanisms of life insurance to do those things. Short story, in medieval times, in medieval Europe, people that did things like welding, metalwork, not welding, but metalwork, leatherwork, all of your guilds, everybody that did the crafts and built homes and things of that nature, created life insurance for their people. And that's really part of how it started. When they did this, they pooled their money together to take care of people, families that when something happened to one of the members of that group, they would then give the family or take care of the family monetarily or financially. This kind of took on its own life, and today you have, that's a real short story, and today you have what we know as life insurance. This is not something that should be taken lightly because unfortunately most people don't understand that the real honest truth is, everyone, we're not going to get out of here alive. You are going to die, and you have to have something. You need to pass something down to the next generation. Okay, and utilize it while you're living. So life insurance is not about death; it's about life. So let's move on. Okay, we insure everything except ourselves. A lot of times, we insure cars, which, by the way, is a mandatory tax. Boats, motorcycles, pictures, recreational vehicles. I'm not going to read everything on the screen, but you understand where I'm going. But a lot of times we don't insure what's most important, which is us and our family members. Okay, what that means is you're insuring yourself to benefit yourself and the next generation. And if you have a charitable organization, your university, some nonprofit organization, cancer research, whatever the case may be, those things are important. The things on the screen are usually depreciating assets. Now, there are some cars that appreciate over time. However, most things on the screen are depreciating liabilities. We want to talk about assets and liabilities. Talk to your tax advisor. Okay. We then consume, let me move my face here. We then consume things that are overpriced. We should all know that everything we purchase and consume is overpriced. No disrespect to the retailers, producers. If you were to buy something directly from the manufacturer or the producer, the price would be lower. But I digress. We purchase overpriced designer clothing, coffee. We know I'm drinking some coffee right now. Overpriced high products. We go out to eat every day, fast food, concerts, uh, phones, gadgets, shoes. We could just keep going, right? Every day something's being pushed at you to buy. That's just for you to consume. Okay. All right. Now let's get right into the matter at hand. What is tax-free accumulation? Accumulation. What is accumulation? The growth or increase by continuous, repeated, constant addition to a fund or portfolio with the principal untouched. Principal plus interest equals accumulation. I'm going to do a real quick and concise example of what accumulation is based on this particular formula here. Principal plus interest equals accumulation. Contributions to insurance products that accumulate cash value. Sometimes the frequency is flexible, which means you have things like a flexible premium deferred annuity, which the premium can be flexible. Right? What is principal? Principal refers to the original sum of money that is invested, borrowed, or lent. It is the initial amount before any interest, gains, or losses are factored in. That means the original amount that you either lent or borrowed is the foundation for that particular accumulation formula. Follow me. What is interest? Interest is the monetary charge for borrowing money, generally expressed as a percentage, such as the APR. We all heard that before. Annual percentage rate. There's a thing called compound interest, which we're not going to get into. Interest may be earned by lenders for the use of their funds or paid by borrowers for the use of the funds. So here we are. My point is this, you become the bank. Maybe that's what I should have titled this. You become the bank. And I'm going to do another, now that I'm thinking about it, I'm going to do a presentation called You Become the Bank. All right. So when you loan your money to an insurance product, essentially what you're doing is lending your money by way of an insurance contract, annuity or life insurance contract, IUL, universal life, not term, but anything that accumulates interest, cash value. You're essentially becoming the bank because you gain interest on your contract to be used later by you, yourself, or your beneficiaries. You become the bank. So let's look at our little diagram here, our example. I'm going to move my face one more time. So this is how it works on the bank's end, right? You become the bank. Okay. I'm sorry. First example. You deposit your money into the bank. The bank then lends that money out in the form of loans. Okay. Oh, technical difficulty here. All right. So you lend your money to the bank. The bank then lends that money out in the form of loans. And what happens next? All the money they lent out that you gave them. So check this out. You're giving your money to the bank in the form of a deposit, right? And then they lend that money out and get interest on your bank deposits. If you don't have an account that draws interest with the bank, then you receive none of that interest back to you. So essentially, what you're doing is you're giving your money to the bank, they're lending it out in the form of loans, and then receiving interest on the money that you gave them, but you're not participating in the interest. So what happens is, unless you have a savings account with that bank, you don't receive any interest. And on top of that, the banks are receiving massive amounts of interest rates in the form of loan paybacks. They're lending money every day. They're trading on the markets every day and receiving massive amounts of it. People don't understand what the bank is doing. They are literally almost 24/7, 365 receiving interest payments on loans that they make with your money. Okay, I'm gonna keep going. All right, so now here you go. Here we are. So how do you accumulate interest for yourself? Okay. You get an insurance policy. You contract with an annuity or an insurance policy. The carrier is then in contract with you. You give the carrier your premium. The carrier does what it does on their end to invest in, just like a bank, but they're not a bank, which is why they can then, if you see yourself here, you then receive interest to yourself and have a death benefit to your beneficiaries and have living benefits to yourself, all while accumulating interest. I think it's a better deal. I'm not saying don't have a bank account, don't get me wrong. I'm not saying don't have a savings account at a bank, don't get me wrong. What I am saying is this: why not participate in a better position as the bank to receive higher interest rates on your insurance premiums policies, your life insurance policies, because you don't get this with a property and casualty policy. Your car insurance, homeowners insurance does not pay you anything. You accumulate interest when you enact or engage in a insurance policy or annuity. You become the bank because the insurance carrier is paying you guaranteed interest. Guaranteed. Interest rates vary by carrier. River Rock Financial Group is contracted with several carriers, and we can run illustrations across different carriers to see what best fits your goals. A word about savings. You cannot outsave inflation. This is why this is important. In an insurance contract, in a life insurance or annuity contract, it's locked in. If you get the basic whole life policy, which accumulates cash value, or the basic annuity, which is usually a deferred premium, flexible deferred premium, $100 a month, it's usually probably going to be higher than a savings account. CDs and savings accounts are long term. They fluctuate. Life insurance policies and annuities are long-term fixed interest combined with income features and product mixes, asset protection, and living benefits. Savings accounts don't give you living benefits. Savings accounts don't, I'm not saying I don't have a savings account. Savings accounts do not have these features. Now, savings account can be long-term, but a lot of times, what I mean long-term, 5, 10, 15, 20, 30 years. So what are the instruments of accumulation? Of course, whole life insurance policies, also known as permanent life, straightforward cash value built into the policies. You can borrow from it and still have a face value benefit. You can have a $500,000 life insurance policy, whole life policy, which is accumulating cash value. You can borrow from that policy and still have a death benefit and still have living benefits. Can't do that with savings accounts. Most carriers have attractive guaranteed interest rates combined with enhanced benefits. Annuity, talked about this. Flexible premium deferred annuity. What this means is the premium is flexible. I tell people put $100 a month in an FPDA, flexible premium deferred annuity, put $100 a month in it and leave it alone for at least 10 years. Annuities create future streams of income. Here's an example of a 30-year-old female, $100 a month, 10 years. The guaranteed interest rate was 3% at the time. Interest rates change every month. And you see at 10 years, she's at 13, almost 14 grand. Leave it alone. This is a low risk annuity. Single premium. This is for people who have saved up money in another financial product, instrument, account, IRA, 401k, all the 401s, all the I's and all that stuff. This is for those people who have, 10, 20, 30, 40, 100,000, 250,000. They want to roll over into a SPIA, a single premium annuity, and leave it alone. Put it in, leave it alone. Here is if somebody rolled a $100,000 single premium into a single premium annuity, 10 years worth of income, a guaranteed interest rate of 1.2%, initial payment $884. It's immediate. Now you don't have to take the 800. You can just leave it alone. You don't have to, you can just put it, you can just leave it. So what I'm saying is, at this point, hopefully what you're understanding is it's the long game, not the short game, not a 5-year, 3-year. Savings accounts, I'm trying to save for the house, 3 years, cool, 2 years, 4 years, whatever. This is the long game. And also, if you notice here, if the proposed annuitant dies before the last guaranteed payment, remaining guaranteed payments will be made to the beneficiaries until the last guaranteed payment has been made. Which means it also acts as, it is a type, well, I don't want to say insurance. It also acts as a guaranteed stream of income to your beneficiaries. Multi-year guaranteed annuity. These usually have higher interest rates in the beginning, then they kind of come down a little bit. 3, 5, 7, and 10-year guaranteed interest periods. Here's an example of a 42-year-old female, single premium, $50,000. And hopefully I'm not scaring anybody with these 50,000, 100,000, but if you have it, cool. If you don't, there's a product for everybody. So the initial guaranteed interest rate at the time with this particular product, and I'm highlighting Royal Neighbors here, great company, great carrier, great people. At the time, the guaranteed interest rate for 5 years I'm sorry, this one is 10 years. 10 years guaranteed at 5.45%. After that, it's a guaranteed interest rate of 3%. It's a no-brainer. Put the money in, you see what happened. Her 50,000 at 10 years goes to 85 grand. $85,000. Over $85,000 in 10 years. Imagine in 10 years, this person's going to be 52 with a guaranteed lump sum in an account value of $85,000. At least $85,000. Which then can be turned into a stream of income. It can be rolled into another account. It can just be left alone for another couple of years. This is very powerful. Universal life has an adjustable premium feature, adjustable death feature, guaranteed interest rates, cash value. It's flexible. As you see in the diagram, principals plus interest create cash value in that policy. Here's the difference with the IUL. It does tie itself to the performance of the stock market. If the index performs well, you participate. If it drops, you have a floor, and your minimum, listen, your minimum premium, your minimum investment cannot be touched. There's a guaranteed minimum interest rate. You participate in the market success gains, and you have a wall, a floor, a minimum guaranteed interest rate. You don't lose your initial investment, whether it's a monthly premium or one-time premium. So the time is now. How will you protect your family in the future? What is your duty? Do you know what's going to happen in the future? You cannot afford to act now. Many people do things like, I was talking to a man the other day. He has $35,000 in coverage. He's 67, but he just started. So imagine if you start early. You can start anytime. Imagine if he had started when he was 30, 40, 50. What happens is we think we have time. Time is constantly moving. You have to act now. Do something. Don't do nothing. But a lot of us do nothing, and then we get to a point where we realize something should be done, but we do something, but it could have been more impactful had we done it earlier. I myself have 3 policies on myself to make sure that everything is covered when the time comes. What will you do when your family? What will you do when? What will your family do when? What will you do? What's going to happen? Don't think that it won't happen to you. Don't think these things won't happen. Our carriers have a lot of different products. So what's next? Complete information sheets online. If you're ready now to do a one-on-one illustration, I will give you a free quote today. If you want to schedule a Zoom meeting, please hit the QR code to schedule a meeting with me, up to a 30-minute session to map out your goals and plans and financial strategies. Life insurance is not for death, it is for life. The term life insurance is really a narrow word for a really broad spectrum of things and services that's afforded to individuals who can understand the power of now and planning for the future. Life insurance covers whole life, term life, universal life, annuities, business continuity, disability, long-term, short-term care. Life insurance covers a wide variety of things that are available to you within the words life insurance. All right. Once again, thank you. My name is Max. Please follow us on Instagram, Facebook, YouTube. You can contact me at River Rock Financial Group LLC at Gmail. I'm a licensed professional. River Rock Financial Group is licensed. It's a licensed, fully licensed life insurance agency in Georgia, North Carolina, and Texas currently, and we will be licensed in other places as well in the future. And until next time, do what is difficult while it is easy. Thank you.